and the global markets. What is your reaction to what the Federal Reserve did yesterday?
Well, what the Federal Reserve did yesterday was really absolutely necessary. Global markets were melting down because of a lack of confidence in the U.S. economy. There's been a lot of talk over the last couple of years that the U.S. economy no longer drives growth globally, that it's really China. Well, talk of recession in the United States brought a panic, including in China, and the Fed was trying to react to that. It really doesn't fix the fundamental problem in the economy, which relates to the trade deficit, banking practices on Wall Street, which has caused a lockdown in the mortgage market, and it'll help a bit, but not nearly enough.
What would help?
Well, I think we need to reform banking practices on Wall Street so that mortgages can be made again. For example, there's no market for jumbo loans because the banks cannot resell the loans in the form of securities to the bond market. The bond market has lost all confidence in our largest banks. If Citigroup tries to securitize a bundle of jumbos right now, it's met with a brick wall of disbelief by the bond market because of their sharp banking practices, which are reflected in its massive losses, and the reluctance at Citigroup and other places to reform what they do. Also, we need to look at stimulating the economy in ways other than just cutting interest rates. They're useful. After all, people with fixed-rate mortgages who are prime borrowers, who can get a conforming loan, will be able to refinance. People with adjustable-rate mortgages will now be refixing to a lower rate. And those are good things, but they're not nearly enough.
Will the loans, though, with this cut in the interest rate, be able to loan money? Do they have that?
It depends on the kind of loan you want. If you want to borrow less than $417,000 and you're a prime borrower, you can get a Fannie Mae loan. The rates on those fell quite a bit yesterday with the rate cut. If you're not a prime borrower, even just a little bit below prime, it becomes much more difficult to find a loan. If you want a loan above $417,000, the banks essentially have to put those loans on their books, which they're going to become more and more reluctant to do if those rates fall because of the interest rate risk they face. Remember, short-term rates will go up again in the future. So those kinds of loans are difficult to get. So for a limited group of people, there are benefits. Basically, people with fixed-rate mortgages who are prime borrowers, who could refinance, people that have maybe achieve a 1% rate reduction, and people with adjustable-rate mortgages about to refix, because often those are linked to short-term Treasury yields. For example, the one-year Treasury, that's fallen dramatically. So instead of repegging at 7.5%, people might find themselves repegging at 5%, which is a good thing for them. But more broadly, it's still going to be very difficult if you're not the best kind of borrower, if you don't have a long employment history, or if you want to buy an expensive home. You know, the Democrats keep talking over and over and over again about lower and middle income people. But when you look at their proposals, it's things like food stamps. Now, we all want to help low income people. However, that should be dealt with in long-term legislation. If you want to get the economy moving again, you need to fix the mortgage market so middle-class people can borrow money to buy homes.
How could they do that quickly?
I think that it's really the responsibility of Henry Paulson and the Federal Reserve to sit down with the banks and tell them they've been operating under a flawed business model. Historically, mortgage banking has not...
So Congress should stay out of it.
Well, we need to divide the conversation up. There's the stimulus package, there's banking reform, and there's interest rate cuts. And then there's trade policy. All of them are pieces of a puzzle, and they each have different roles in those pieces. The economy got itself into a pretty serious mess. I remember Lee Iacocca talking about big losses at Chrysler a couple of years ago. Said, you know, it wasn't just a couple of guys messing up in the mailroom. We're in the kind of mess we're in because of a combination of problems. And fixing the banks is really something that, by and large, is an administrative and Federal Reserve responsibility in my mind, because it really requires jawboning. I don't think you can regulate your way through this. Now, for its part, Congress has been holding up legislation that would expand Fannie Mae's ability to loan money above $417,000 on a temporary basis. Paulson has called for that over and over and over again. That's why I find the remarks of your last guest and the House Speaker disingenuous. They say they want prompt action. You know, as soon as they got in, they got a minimum wage cut passed. But they don't seem to be able to get that banking legislation passed. On trade, we're getting whacked by the undervalued Chinese currency. There's been legislation languishing in the House Ways and Means Committee, which they say they support. They can't seem to get it passed. Ways and Means can pass what they want to get passed, which appeases their constituency, and not other things that need to be done. The Bush administration is hardly hardly without sin on this. For example, they say they want to get cash in people's hands right away, then you don't do it through investment tax credits. If you want to get cash in people's hands right away, you put cash in people's hands. You do it through the tax system and the Social Security system.
What about the tax rebate then?
That's fine. But not doing it through investment tax incentives or by expanding social programs. Each side is riding Harvey horses. They're going off to retreats. They should be able to pass legislation like this in a week. Unfortunately, we're not going to see legislation until the end of February, which means it won't bite in its effect until April or May. By that time, the economy will be deep in recession if things go south as rapidly as some of us fear. At that point, a 1% stimulus package isn't going to help a lot. The last time around, the reason the stimulus package helped was because it was followed by further tax cuts.
Our guest is Peter Morici. He's an international business professor at the University of Maryland. If you want to call in and ask him a question, Democrats 202-737-0002, Republicans 202-737-0001, and Independents 202-628-0205. You can also email us at journal@cspan.org. Let's get to your phone calls right now. Peter Morici will be with us for 45 more minutes. Cheska, Minnesota, you're first.
Good morning. My question is, I'm retired, and I've had a situation where I've seen my investment drop by about 30% with the devaluation of the dollar. So this lowering of the interest rate, I need to see a gain from that, and I would love to see the government tie the charge of that credit card companies can make on their charge to the prime rate. Let's say that the maximum charge could only be 7 or 10 points above the prime rate. I think this would stimulate the economy, lower people's debt, and it would make the credit card companies a little more careful of who they loan money to. I'll take your answer off the air. Thank you.
Well, regarding credit card rates, for good borrowers, those who pay their bills on time with a good credit history, the rate's about 13–14%. So that's well within the bounds of what you just described relative to prime, or close enough. What you're talking about are the very high rates that are sometimes charged borrowers in delinquency. You have to remember that MasterCard and Visa take very heavy losses from people not paying their credit cards. They're not very well protected by the bankruptcy laws in that regard, and so they charge very high rates to people that abuse credit and don't pay their debts. If Congress were to legislate that away, impose usury laws like we had in the 60s and 70s, then those folks would have no access to credit at all. Retired people are caught in a squeeze with regard to their investments. A lot of them have money in CDs and so forth. Those rates have gone down with the previous Fed interest rate cuts and are likely to go down in the months ahead, again with the rate cut we had yesterday and we are likely to get in the future. That's one of the unfortunate aspects of stimulating the economy through interest rate cuts. We do get a benefit by helping creditors, and that benefit is larger than the one, by helping debtors, and that benefit is larger than the loss we get on the other side to creditors in terms of consumer spending. But the people that do rely on certificates of deposits, retired people, do get burned in this sort of thing. That's one of the reasons that if we had a prompt, targeted stimulus package, I would advocate linking it to the tax rolls and the Social Security rolls. So if you're collecting a Social Security check, you get an $800 rebate. If you're paying taxes, you get a rebate in proportion to the taxes you pay. If you want to make the stimulus package somewhat progressive, you could link it to Social Security taxes. That way, it would be proportional to the first $100,000 or so of income that people earn, because that's about the limit on the Social Security tax.
And could that happen quickly? Because there's been this discussion that the IRS with rebates would have a hard time getting them out in time.
Well, they're going to have trouble getting them out. There's going to be a process to go through. But if we're going to have any kind of tax rebates or any kind of checks written to people, whether we do it now or we pass the legislation at the end of February, we're going to have that same mechanical problem. But by hobby-horsing this, I felt so sorry for Ben Bernanke. As critical as I've been of some of his management of the banking system, I felt so bad for him last week when he was testifying about the stimulus package. One congresswoman from California suggested that in her district, she had a lot of ex-convicts who were living, as she said, with their mothers and girlfriends and not working. And we needed to figure out a way to get money to them. I don't know that that is exactly the kind of stimulus package, a value-driven stimulus package, that Democrats should be advocating.
You have been critical of the chairman. Why?
Well, I believe the chairman has been slow to act. He manages too much by consensus. It too much reminds me of department meetings that I go to at the university, where professors have very strong views about whether doors should be hung with the hinges on the left side and the doorknob on the right side, or the doorknob on the right side and the hinges on the left side. Also, the basic approach that economists have to managing the economy is to look to historical econometric studies of behavior. For example, how do people behave to changes in stock prices? In order to do that, you need to see data often after it's too late. My feeling is that we have known for some time now that the banking system is broken. We have known for some time now that cutting interest rates won't resurrect the jumbo market. And we've known for some time now that the incentive structures for bankers, the way that they are paid, is a problem. We know that there's a conflict of interest between the way the bond rating agencies are paid and bonds are evaluated is broken. And we know that there's a problem with the mortgage writing process. We have only heard from the chairman really in an important way on the mortgage writing process.
All right, next phone call. Elkhart, Indiana, Republican line.
Hi.
Good morning.
I'm wondering if Congress would stop wasting money on the pork barrel, if they would use that to help with health care and all the waste that they're doing, and if they would do something about the illegal immigration of all the money that we could for the medical costs, their food stamps, their housing, and if we got real people in there to run the Congress, to rep our House Representatives and Senate, if we just had regular people that could work together and get something done.
Thanks, caller. What about the spending and the federal deficit? How does that play into this discussion?
That's really a long-term issue. I have two things to say about the deficit. First of all, we actually need a deficit right now because we have a huge trade deficit thanks to very poor trade policies that the Democrats and the Republicans have been both slow to fix when they've had the opportunity. We have a trade deficit that comes to about 5.5% of GDP. That means every time we spend a dollar, only 94 cents of it goes back into the economy. That means essentially to keep people working, we have to spend 106% of what we earn to keep the economy going. Now, to some extent that's covered by people borrowing against their homes, and to some extent that's covered by the federal government having a large deficit. If we're going to reduce the trade deficit, the budget deficit long term, we have to do something about the trade deficit. That's the first thing. The second thing, it's absolute sophistry and demagoguery to say we're going to pay for the stimulus package with spending cuts down the road. The size of the deficit that we need, should have, and will have 2 years from now is independent of any stimulus package we create today. I mean, if we give people a short-term tax break, it goes away. So taxes return to where they normally would be. In fact, the deficit might actually be a little smaller because if we dodge a recession, the economy might be a little bit bigger 3 years from now than it would be now. But then again, I think that what's going on here is posturing. I think the Democrats really aren't going to cry very much if the economy slows down enough so that they have a big victory in November, but yet they, by virtue of having given the appearance of helping, I really doubt their sincerity in all this. With regard to the Republicans, I think they're trying to squeeze out the last tax breaks they possibly can before they're pushed out of office.
Let's go back to the tie between the federal deficit and the trade deficit. You have written before that it's tied to 3 things. What are they?
Well, I'm sorry, the
trade deficit is tied to oil, and
yeah, the trade deficit is tied to oil. It's tied to the trade with China, and to a lesser extent the troubles of the automobile industry. With regard to oil, both the administration and the Congress have been very slow to act to do the kinds of things that we could do to substantially reduce our dependence on oil. Hillary Clinton is right. We could easily accomplish 50 miles per gallon over a period of about 10 years. The technologies are in place. Moving to hybrid vehicles and electrically charged vehicles, plug-in vehicles, would help us move substantially in that direction. We could lighten our vehicles. People that drive Explorers could drive Escapes. People who drive Expeditions could drive Explorers. These things are well within our grasp. With regard to China, we talk a good game about dealing with China, but we don't do much about it. The administration, year after year, has refused to recognize that China manipulates its currency, even though it says it uses its currency for economic development purposes and sets it for the purposes of generating exports. For its part, the Congress loves to criticize the administration on this issue and loves to keep legislation that would address the problem tied up in committee.
They've also threatened this legislation numerous times that they're going to go.
That's Schumer's big view. You have to understand Senator Schumer. He loves to threaten the Chinese. I mean, you go to his office and his staff will tell you, well, this is really a bluff, as if the Chinese with an embassy down the street don't know it's a bluff. Either the Congress votes on legislation to deal with China, or it should stop talking about it, and then we should just say, well, we're going to have this big deficit, and we're going to have to live with being indentured to China. China holds over $1 billion in foreign exchange reserves, mostly dollars. The current capital value of the equity market in the United States is only $15 billion. The Chinese could buy 7% of all the publicly traded companies in the United States right now. They're expanding those holdings this year at the rate of $400 billion.
Chicago, Democrats line, your next phone call. Chicago,
Hello.
you with us?
Hello?
Go ahead.
Hello? Yeah, I want to know how the Fed rate cut, how that stimulates the economy. I thought you could pull with a string, but you couldn't push with a string. And the trade deficit, isn't that just American companies? I mean, they got their plants overseas. Aren't they just trading with themselves? Isn't that what the trade deficit is?
Mr. Marisi?
And what is the bond market? I mean, who are these people, the bond market? I mean, they just seem like rich people sitting on their hands, you know, while the country goes down the tubes. I mean, we should tax these people if you really want to fructify the earth, you know.
Thanks, caller.
What's the first question?
I'm blanking myself. You talked about trade deficit and the bond market. Why don't you address those first?
Okay, with regard to the trade deficit, it's people like you and me. We go to the Walmart, we buy coffee makers and so forth. It's not just big corporations that outsource. A good deal of the products that we purchase from China are ordered by Walmart and Target and so forth, made by small manufacturers in China, and that really bypass our large manufacturers. Certainly, American companies going over there and outsourcing is an issue, but you have to remember they're responding to the incentives that have been put in place by the Chinese government and that our government doesn't respond to. Who is the bond market? Well, the bond market has buyers and sellers. The sellers are people like Citibank who securitize debt or for bonds. They underwrite the bonds of large corporations that need to borrow money, like, say, Ford Motor Company or General Motors or General Electric. They're the investment banks that do that. And on the buying side are insurance companies, pension funds, who really represent people like you and me. Those folks have a fiduciary responsibility to buy bonds that will pay a decent return but be safe. And so that is why they are right now skeptical about what anything that Citibank or Bear Stearns would issue, because they've been burned.
Next phone call, Mays Landing, New Jersey.
Hi, good morning. You had made a comment earlier about everything's a piece of the puzzle, and what we have to do is we have to look at the big picture, long term. There are many key factors, and the bottom line here, it's always the bottom line in the mighty dollar, and it's all of these little pieces of the puzzle that have to be all dissected and looked at that create the big picture of the puzzle. When you give a man a fish, he eats for a day, but when you teach him to fish, he eats for a lifetime. And what we really need to do is we need to restructure everything the way that we do it, and you need to empower we the people once again. You know, if you just look at combining, you had made a comment earlier about certain things that the federal level does in comparison to what the state levels do. The bottom line is it's we the people and our spending, no matter how we spend it. Spending is what makes the world go round. If spending and sales stops, the world stops.
All right, we'll leave it there. Mr. Marisi?
Well, you know, empowering the people is an interesting concept. One of the problems we have is the incentive structure on Wall Street, which pays exorbitant salaries that candidate Clinton has drawn attention to, and I credit her for doing that. By the way, I'm not working, I complimented her twice. I'm not working for the Clinton campaign.
Are you endorsing any candidate?
No, I'm not. I'm not endorsing her. I'm not endorsing anyone, but she has made some points there. Shareholders cannot bring suit when executives are overpaid. For example, at Bear Stearns, at Bear Stearns and Merrill Lynch, compensation is up this year, even though they've lost massive amounts of money. Shareholders can't bring suit to say that those compensation packages are irrational or inappropriate. We've had CEOs leave with enormous amounts of money. Shareholders really can't win proxy battles very effectively, so they're not particularly empowered. They elect representatives to Congress who should deal with that. Representatives to Congress and their senators require very large campaign contributions to be competitive and to win re-election. That's a hard reality they must face. They have to raise, under our campaign laws, contributions from individuals, not companies. So there's always the search for those individuals with large enough personal income that they can contribute up to the maximum amount, which is not terribly large. And the largest pool of people like that are on Wall Street. And you got 30-year-olds making $10 million a year. They can give money to the Clinton campaign, the Schumer campaign, the Bush campaign, whatever campaign they like. It's no accident that the Congress has been very slow to call for real reform or to act on real reform with regard to the banking sector, their salaries, and so forth. We hear a lot of chatter about this. The Bush administration, for its part, runs as far away from the issue as it can, and the Federal Reserve, who we expect to be politically independent, is surprisingly silent. Any economist knows that if you incentivize people to create complex financial instruments that the world can't understand, you'll have lots of complex financial instruments that the world can't understand, with the usual debacle to follow. Yet the Federal Reserve, politically independent as it might be, has been rather quiet about that.
On the Republican line from Louisiana, help me with the name of your town.
Bossier City.
All right, go ahead.
Yeah, I'm retired, 64 years old. I want to kind of bring up an issue that the gentleman was talking about, the cost of credit cards, credit card debt, and by association, the mortgage debt. And long ago, I learned from my father a very important rule: if you can't afford it, don't buy it. Now, I routinely put anywhere from $20,000 to $30,000 a year on a credit card, but I have not paid 1 penny of interest or penalty or any cost to a credit card company since 1972. So, in my humble opinion, problems like this often come down to the individual responsibility, and not being facetious, greed and stupidity. People want something, they want it now, they can't afford it, so they put it on a credit card. Well, they never could afford it, they never should have bought it. Same way with the person that buys the $500,000 house when all they can really afford is $100,000 because they're getting a subprime mortgage. They're going to have to pay for that.
That's your point, caller.
Well, you know, it is important that people exercise personal responsibility if they're going to have secure retirements and be able to sleep at night. You said you've been maxing out your credit cards and haven't paid any fees. You may be the mightiest financial engineer of all. With that said, I think it's important to remember that as long as we have a huge trade deficit, we'll be borrowing from the Chinese to finance it. In turn, that money has to be recirculated through the system, essentially borrowed by the federal government and consumers to keep the economy going. If we have a large trade deficit, we have to spend 105, 106% of what we make to keep the economy going, and that requires us to borrow. So it's one thing for the Congress to say we need to have budget discipline, and for folks like me, economists, to tell individuals to exercise personal responsibility and self-discipline. But as long as we have a broken trade policy in a globalized world, we're going to have trouble living with those kinds of disciplines.
Williamsport, Maryland, Democrats line.
Yes. This is Keith from Williamsport.
Hi, Keith.
And what I'm calling about is, okay, I always thought the middle class was between 40 and 70,000. But when you're getting taxes taken out from you, and by the time I get taxes taken out of my check, at the end of the year, I make about $50,000. I'm a truck driver, but I'm actually only bringing home 27 by the time taxes are all taken out. Now, to me, if anybody making less than 20,000 at their income tax at the end of the year, they get a refund check of like $5,000. But me myself, you know, I'm getting $700 because I make over, you know, the amount that I can collect anything. I mean, there's something wrong there. To me, there needs to be more help with the people that make $40,000 to $70,000 a year.
Mr. Morisi?
Well, you know, Warren Buffett observed, he's a very responsible gentleman, observed that his average tax rate is lower than his secretary or his receptionist. He did a little comparison of the 1040s. Now, that's absolutely absurd. What gives rise to that? Well, there's a 36% marginal rate on anything over about, I think, $300,000. So you'd expect that Warren's average tax rate would be considerably higher than his secretary's. However, there's all kinds of ways of sheltering even ordinary income by turning it into capital gains, which is a popular hobby on Wall Street through hedge funds and so forth. And while there's been a great outcry about this among people in Congress from both parties, nothing ever seems to happen. And I would suggest to you that the mightiest campaign contribution farm on earth is on Wall Street, is in Lower Manhattan. And as long as those folks are turning a portion of their very tax-sheltered incomes into campaign contributions, we can't look forward to meaningful tax reform where everybody pays their fair share. I find it appalling that people that make $40,000, $50,000, $60,000 a year pay a higher average rate than hedge fund managers that make $10, $20, $40, $60, $80, $100 million a year. The Congress knows how to deal with that problem, but it's happily collecting campaign contributions, so don't expect anything to change anytime soon. Similarly, on trade policy, the most supported sector on earth is the intellectual property sector, the Silicon Valley sector, which is very active in politics in California. Hollywood, intellectual property again, patents and copyrights, always championed by USTR, an important source of campaign contributions. That's not going to change. A lot of manufacturers are smaller these days because of trade and just the nature of the business. They don't generate those kinds of campaign contributions, and they don't seem to get the attention from Congress that they should. We hear lots of rhetoric when we have a Michigan primary and somebody like Romney says, you know, we need to help the automobile sector, which we sorely do need to address. However, when they get back to Washington, they just don't seem to remember because there just aren't that many huge salaries in the automobile sector that generate lots of campaign contributions, or in the machine tools sector, or making refrigerators or air conditioners or textiles or furniture or what have you. They tend to get forgotten.
Another early primary state is Florida. Jacksonville, you're on the air.
Yes, good morning.
Good morning.
First of all, I just wanted to say that we need to get these presidential candidates to come into C-SPAN and to answer the American public's questions. And I understand that Christopher Dodd was the only one that accepted your invitation. So I would
we've talked to many, caller. You should go to campaignetwork.org. You'll see all the interviews there.
I mean, I want them on the air to answer questions.
They have.
From your callers?
From callers.
Well, there you go.
Okay, so Barack Obama's been
Barack Obama has not, and Hillary Clinton has not. We've put out invitations to both of them.
Okay, that's what I'm saying.
Okay.
We would like to see them.
All right.
Okay, now.
Well, I think there's an important reason why you haven't seen them.
I know what it is.
Well, Hillary's all the way out in front. And so she's in the business of controlling her message very precisely, which the New York Times is very happy to help her do. This week they ran a wonderful story about how she was going to deal in her economic policies in an exclusive interview with the excesses of the marketplace. They also ran a similar story essentially making out Mr. Giuliani to be a thug. But the point is that Clinton can get out her message through the major newspapers because she's way out in front. She's really the presumptive next president because the Republicans are not likely to win. Obama, for his part, is a man of wonderful character and who says many interesting things that are value-driven. But they're largely generalizations and without a lot of detail and substance. I would suggest if you got him on here and the right folks started calling, he'd be on the dime pretty quickly. Both of them are like rock stars in the campaign. They prefer to communicate through the media where they can control things. The debates are a more controlled environment. You get candidates on venues like this one who are trying to catch up or trying to distinguish themselves in some way and can't get adequate media. So I do think there's an element of campaign strategy going on here.
Next phone call, Arlington Heights, Illinois, Republican line.
Hi, thanks for taking my call, Professor, and I enjoy your comments. A couple of quick things. First of all, it seems to me like a tax rebate and dropping the interest rate by the Fed Reserve Board is kind of an absurd way to stimulate the economy on any kind of a long-term basis. It's like rearranging the deck chairs on the Titanic. Don't you think that on a long-term basis we need to create some value in this country so that we can improve our economy, something like developing alternate energy sources that we can export or developing some technology that we can export to the rest of the world to ultimately improve our economy?
I think I generally agree with you. But it's important to recognize the immediate problem that we're in. A prolonged recession would damage our ability to invest in the future and do the kinds of things that you talk about. Short term, a temporary tax cut, lower interest rates, and jawboning the banks to clean up their lending practices would go a long way towards avoiding a prolonged economic slowdown or recession. And I think we should do those things. I heartily endorse the interest rate cuts. I heartily endorse some kind of stimulus package. But sooner, please, less convoluted, less complicated. Longer term, we need a better trade policy. We need to deal with China more effectively so we don't have this huge trade deficit. We need to make investments in energy so we don't have this enormous dependency on the Middle East and have to maintain this enormous military apparatus in the Middle East to defend the supply of oil. Those are important things to do as well. Energy policy and trade policy are essential to the long term. Through both of those, we could create a great deal more value in the United States. Unfortunately, whenever you talk about doing something about China, the very people who are worried about the budget deficit are the same ones that will call you a protectionist. China spends $450 billion a year buying dollars with yuan that it converts into treasury securities, which creates a 45% subsidy on its exports. That would be more than the equivalent of shutting down the United States government and state and local governments and giving all the money we spend there to American exporters and seeing how well they would do in global markets. That's one of the reasons, for example, China doesn't have a healthcare system worth anything anymore. There are things that we can do, that we should do in the long term, but I think it's also important to deal with the problem we face right now. Unfortunately, the Congress is going off on its retreats, and, you know, the Romans could take comfort that they didn't vote for Nero while he fiddled. Unfortunately, the people that are fiddling right now, we voted for.
Should the Federal Reserve cut the rate again next week?
I think they should cut rates as much as is necessary to get what bang they can out of lower consumer rates and lower rates on conforming mortgages. How much that is not clear to me. I think we can go further. Whether they need to go further next week or at the next meeting or sometime in between is uncertain to me. But they can go further.
They've already signaled that this is something that they're going to do, with the implied impact being that they want to bring up confidence, bolster confidence in the market. Could it have the opposite effect in that if you're already signaling you're going to cut rates again next week, that you are panicking?
Well, I think that if you read the statement closely, it didn't say next week. It said it would continue to monitor the situation and take further steps. The market has decided the market always speculates about what's going to happen at the next meeting. So since the market speculated that there would be another cut, then pundits turned around and said, well, the Fed has signaled that there would be a cut. People tend to put words in Mr. Bernanke's mouth that are not there. And I don't think that's particularly fair to him. But I do think that lower interest rates are useful. But as I said in another interview, consider yourself in a cabin someplace with two windows, and they're both open, and it's zero outside. Cutting interest rates is like lowering just one window. The problem in the New York banks is the other window. We have to close both. We're only going to get so much out of interest rate cuts until we make it possible for the regional banks to create mortgages again in the jumbo market and in the subprime market. And be careful how you use the word subprime. There are many worthy people that aren't quite prime, that just a little bit higher interest rate and they're perfectly decent credit risks.
Next phone call, Hartford, Connecticut, Democrats line.
Hello.
Hello, caller.
Hello. I would like to ask about how the professor feels Mitt Romney would affect, well, his policy in regards to the auto industry, how that would affect our economy as well as the American spirit, having the Cadillac be the showroom car of the world.
Oh, I think that Mitt Romney's policy towards the automobile industry was to say some flowery things for the Michigan primary, and that's just about it. I don't think that anyone would endorse an across-the-board bailout for the automobile industry because a lot of its problems are its own making. However, if we took the kinds of policies that I think we should take towards trade, and that is making sure that foreign governments don't manipulate their currency and don't subsidize their exports, that the automobile industry in the United States would be competing on a more level playing field. Some of that could take the form of Toyota building out further and Nissan and so forth, Honda especially, because they seem to be the most competitive of the bunch. And some of it would be in the form of the Detroit 3 building out. Although I would say to you that the likelihood of us continuing to have 3 major domestically owned automobile companies is low. Both Ford and Chrysler are in a lot of trouble. Ford's got a decent vehicle lineup but can't get traction. It has a lot of cash on hand. Chrysler has a lot of cash on hand, doesn't have a decent vehicle lineup, and is clueless about how to create one.
Indianapolis, Independent Line.
Yes. Well, Mr. Morisi has now answered most of my questions while I was on hold.
Well, that's
but
good.
I would like to state that he has made this more informative and more concise than I have heard to date. And watching the subcommittee investigations, the Democrats, the Republicans, and he should be elected our next Fed chairman or Treasury Secretary, so he can fix these problems that are going on, because he seems to understand them. And in terms the rest of us can understand.
Thank you, caller. Well, what do you think?
Thank you. Although, I guess this is one of the virtues of tenure. Remember, my dean is probably furious, or I don't know how he feels about what I've just said, or my colleagues. Some of them agree with me, some of them don't agree with me. But my office will be there waiting for me when I go back. It is one of the advantages of tenure. There are many disadvantages of tenure, I will admit as well. But one of the advantages of having tenured professors is that they can take a look at the economy and make these judgments. That is a self-interested statement, just like a banker saying he needs high wages. Take it for what you think.
Well, those that like what you say or are interested in what you say, do you ever write columns or write in magazines? Where can they find?
Well, they basically, if you type Peter Morisi into Google News, you're going to come up with lots of hits of op-eds I've written, which get posted on websites around the world. FinFax, for one, posts some of what I do, as do other, that's an Irish portal, as well as several other portals around the world. And I'm published frequently in major newspapers. I'm a contributor at the Providence Journal. I'm very proud of that. It's a very eclectic newspaper which publishes all kinds of views, many of which I don't agree with, but I credit them for having a much broader editorial policy than, for example, the New York Times or the Wall Street Journal. And I am published by other newspapers around the country. My work is readily accessible, and if anyone sends me an email, I'm happy to put them on my email list, and they can get my columns directly along with my forecasts.
Where can they find your email address?
Just type in Peter Morisi and do a Google search. It'll take them to the university website, and from there they can go.
All right. Charleston, South Carolina, Republican Line.
Yes, good morning. My name is Eric, and I really want to thank Peter for his honesty, integrity, and the comments that he's been making. I would like for him, Peter, if you would, to comment on things like NAFTA and CAFTA and their impact on the American economy and the stimulus that it does not provide in terms of creating new American jobs.
Well, we never really saw the full impact of NAFTA for a couple of reasons. Mexico really never reformed its economy in the way that the Chinese are reforming theirs. You know, the Chinese comparative advantage isn't just cheap labor, and it isn't just an undervalued currency. It's also an earnest effort at reform. Now, certainly it's far from complete, and there are a lot of things wrong with China. But Mexico really never got on the wagon the way China did. On top of that, Mexico is disadvantaged by China's undervalued currency. Their exports do tend to supplant stuff from the United States. U.S. policy towards trade agreements, I think, should be seen in the broader context of the general strategy. I'm for free trade, but if we're going to have free trade in goods, then we have to have free trade in currency. We can't lower our trade tariffs. Ours are about 2.5%, 3% of the value of imports, and permit other countries to undervalue their currencies by 30 or 40%, and then to close their markets. You know, you really can't export cars from the United States to China unless they're very high-end and very expensive, you know, bought by just a few people. You have to make them there or you can't get them in. They have high tariffs and other restrictions. Then if you want to make them there, they make you source parts there, which encourages General Motors and Ford and others to relocate their parts suppliers to China, which in turn, with an undervalued currency, causes them to re-export here. My feeling is that many American manufacturers could be competitive in the context of freer trade if freer trade would not be manipulated. I've never heard Sue Schwab talk in those terms. She's our U.S. trade representative and a colleague of mine from the University of Maryland. We had our offices in the same building. I think it's high time that the United States looks at trade agreements within the context of how other countries behave and use or abuse them. You know, in the context of CAFTA, I'm perfectly happy to have free trade with Canada. They let their currency float by and large. They cooperate with us. We have our differences. We've had a perennial dispute over lumber, and we've had disputes over fish and potatoes. They tend to be concentrated in resource products, and I'm sure they're not completely happy with us. But we get along, and I think we can get along with just about anybody if they didn't subsidize their exports, manipulate their currency, and find other means to exclude our products. Competition's good for everybody.
Baltimore, Maryland.
Thank you, Mr. Morrissey. I echo the last caller. I do think that you are straightforward and honest with your answers. Here on the CAFTA and NAFTA answer. I had 4 questions, but I'll shorten it to the 2 most important. Yesterday, Peter Orszag testified in front of the Senate Finance Committee, and Senator Chuck Grassley was asking him questions about the risk of recession and whether we were there or not, and he asked him that, and Mr. Orszag responded with, the risk is elevated, the blue chip is up 40%, and he said something, I didn't catch exactly what he said, that something pays off if the economy enters the recession. I was wondering if you could explain what he meant by that. My last question, real quickly, I am former military and former Marine Corps, and I want to know why in 2001 and the subsequent years that we've been in this war, what happened to buying war bonds? Why isn't that a staple of this economy with the war going on, especially now in this downturn? Whatever happened to that? That's how we got through the wars, both of them. You know, the flag raising, the Marines and the Navy corpsmen who did the flag raising on Iwo Jima, they went around and toured the country raising to get people to buy war bonds. Whatever happened to that?
Professor?
Okay, well, first of all, let me thank you for your service to our country. I always admire people who've been in our service, but especially Marines. That said, we had war bonds during the war because we had an enormous financing problem. Instead of taxing people terribly heavily to pay for World War II, which was a much heavier burden than the war we have now, we wanted them to buy bonds. And so we had these bond campaigns to essentially get people to tap off 25% of their income into future consumption. We really don't need to have war bonds right now to finance our federal budget because we have no trouble selling Treasury securities, in particular to the Chinese. The Chinese spent last year $450 billion on foreign exchange to prop up to keep their currency suppressed, and a good deal of that is in U.S. dollars. Our budget deficit was less than $300 billion. The Chinese could finance our whole budget deficit, and unfortunately, the Bush administration and the Congress are perfectly happy to indebt your children to the Chinese forever. Our external debt is pushing up around $6.5 trillion. The interest burden on that is about $325 billion a year at 5%. But that's essentially why we don't have war bonds.
Question for you, a couple questions for you from one of our viewers in an email. How much of the impact does the spending on the Iraqi war have on this economy? And what is your opinion about the Bush administration's less regulation, free market, and lack of control leading us to the economic recession?
Oh, wow, those are big questions. The Iraq war, you'd have to ask, how would the money be otherwise spent? If the money was spent domestically on social programs, I don't know that it would have much of an effect other than to make people in Congress who advocate those social programs and harvest votes through them happier. I think that probably we have an adequate level of social programs already. Even people talk about aid to higher education. There's adequate aid to higher education. If we put any more into it, the universities will just raise their prices. By the way, they won't raise my salary with those prices. The free market, I'm a free market guy. I'm for free markets. I'm not a protectionist. But I want us to do something about currency manipulation because that's manipulating the market. That's the free markets. On the other hand, we have certain things going on Wall Street which are done in the name of free markets that are not free at all. For example, the bond rating agencies get paid by the people that create the bonds, which is an obvious conflict of interest. But also, most pension funds are required to buy bonds that are rated by those agencies. So they have essentially a little monopoly. There's 3 agencies up there. You have to get a bond rating from them. You have to pay what they ask for. That's not a free market to me. But we have to remember, our last Treasury Secretary for 6 years, actually just before Summers, was Robert Rubin. And he's the Vice Chairman of Citibank, who got to pick the new Chairman of Citibank. And he's profiting from it. And our present Treasury Secretary comes off Wall Street. As long as we have Treasury Secretaries off of Wall Street in the name of having that, quote, financial know-how, we're going to get the benefits of that. Self-dealing, high salaries, non-market processes, veiled transactions, and financial breakdown. That's not a free market.
Stella, Missouri.
Hi, I have some questions about a specific presidential candidate, Ron Paul. And it sounds like the guest and Ron Paul have a lot of similar ideas in terms of the economy. And I won't go over all of those, but free trade is definitely one. Stop manipulating the currency is one. You know, Ron Paul wants out of NAFTA, CAFTA, and doesn't want anything to do with the North American Union, so on and so forth. And as far as the military industrial complex, Ron Paul feels like.
Okay, caller, can you get to your point, please?
Okay, my point is, what does the guest think about some of Ron Paul's policies and ideas? And secondly, since he had pointed out that, you know, on the campaign trail, a lot of folks have a lot of good ideas, and when they get back to Washington, they don't follow through. Ron Paul has a record, a voting record of following through, and he doesn't accept any corporate donations, so he's not tied to these huge corporations.
Thank you.
I don't think Mr. Paul has much chance of winning. He really doesn't have the persona that's necessary to attract the kind of support that's necessary to be president. Leadership is a complex formula. It requires a superior intellect, and we've had that in most of our presidents, and an ability to attract people to follow you. I don't believe that Mr. Paul has that. I like some of his ideas, others I don't like. I think it's a scare tactic to talk about a North American Union. The Canadians aren't interested in a political union. Lord knows the Mexicans certainly are not. They so cherish their independence from their northern neighbor. That's a scare tactic that's used by people to get attention. My feeling is that we can have free trade if everybody plays by the same rules. I don't know that Mr. Paul would say the same thing, but it's not a big deal that I don't agree with everything he has to say. I find some of the things that Hillary Clinton says very attractive, but I certainly don't agree with a lot of what she would do. I find some of the things that Mr. Obama says in generalizations extraordinarily attractive, but I don't know how he'd get there. I find many of the things that Mr. McCain says very simpatico with my views, but I find him to be unrealistic. I mean, going out into the Midwest and campaigning against corn subsidies, kind of a tough way to win the presidency.
Mr. Morisi, another email for you. Could you tell me a couple of economic policy issues that we could take whereby the wealth would be shifted in a gradual way to lower and middle class and infrastructure spending?
My feeling is if we cleaned up the banks in the manner that we talked about, a lot of the wealth that's flowing to Wall Street and then into campaign coffers would flow back to the middle class. You know, the stock market just took a big wallop. Most middle class people have some kind of IRA or 401k or pension system that's invested in the stock market. That whack had a lot to do with the greed on Wall Street. We're going to have a recession that's going to affect middle-class people. The financial breakdown, the structured investment vehicles, the crazy mortgages that were created by the folks on Wall Street. Again, cleaning up Wall Street in the manner that I talked about, which really comes down to cleaning up the mortgage writing process, which is not terribly complicated, without a lot of new regulation, would go a lot to helping out. Straightening out our trade policies would create so many new jobs. We have lost 3.3 million jobs in manufacturing during the Bush presidency. Now, my critics are quick to say, well, technology change, productivity improvements. Sure, according to my calculations, that's responsible for about 1 million jobs. But another 2 million have been lost to basically a huge trade deficit, mostly with China, but with some other countries, in manufactured goods, where we do have a comparative advantage, where we are very competitive. If we had a trade policy that emphasized free trade, not managed trade by the Chinese and the Japanese, then we would have a lot more middle-class jobs. I guess my view of things is we want to get rid of the excesses of the marketplace, but those excesses generally aren't the market malfunctioning, but governments in some way ignoring abuse by powerful interests or ignoring abuse by foreign governments.
I want to get your thoughts on Trudy Rubin's column today in the Philadelphia Inquirer. She's in Davos, Switzerland, where the World Economic Forum is taking place, and she writes, "When the United States sneezes, does the world still catch cold?" is the title of one panel, which will examine whether, as in the past, a U.S. economic slowdown or recession will undercut the global economy. As the delegates arrive, people are also discussing the U.S. elections and wondering whether the next president will pull America back from the world stage. But here's what is different this year. The rich and the powerful at Davos are already looking beyond the United States as present and future global leader. The talk is about whether emerging economies, primarily China, India, and resource-rich Russia, can pick up the economic slack if America falters and maintains global growth.
Well, you know, that was an interesting subject to put on the agenda for people who like to think long-term about the economy a week ago. But I would suggest to you that that panel's question has been answered by the events of the last 3 or 4 days. Just the whisper of recession has caused a global meltdown in equity markets. The Chinese economy over the next 2 decades will likely come to rival the U.S. economy in size. But just about everybody is staring at a flat-screen TV or a computer that was largely invented in the United States or Japan. They're using operating systems in their businesses that were written by Microsoft and the companies in that orbit. The world is enjoying an enormous revolution in supply chain management, which shrinks the production process and makes things as far-flung as Ireland and the Philippines and Wisconsin the same place. All of that has been invented by the American mind, along with some help from the Japanese and the Germans. We are still the primary movers of the world in terms of innovation and ideas. If our government can get trade policy right, get the banks straightened out, balance its budget along with that, I think that we can have a very prosperous future. It is no particular threat for China to industrialize as long as it does it in a way that doesn't victimize our industries. But I think that the notion that the American economy doesn't matter anymore is sort of the liberal groupthink of universities these days. It's the kind of navel-gazing that goes on in liberal arts colleges, and that's what Davos tends to do. And that was a nice panel for last year.
Next phone call, Huntsville, Alabama.
Yeah, I was wanting to know, Peter, who do you think would be the best to run the country between the two parties?
I think that we have a two-party system for good reason. You know, I have owned a lot of different cars in my life. I've had a Chevy, a Ford, a Mazda, Toyota, a Nissan. I switch around because at different times, different companies offer me a better value. I think that both the Democratic parties and the Republican parties offer good ideas and good leadership, bad ideas and bad leadership. And my feeling is that to choose between the two of them is silly. I have probably voted for more Republicans in my lifetime than Democrats, but just every 2 years I vote for my Democratic congressman because he does a good job, and the Republicans haven't offered much in response. I didn't vote for Kerry last time. I didn't think he was a good alternative to Mr. Bush. So my feeling is that no matter what your political philosophy, you're not thinking. You don't split your ticket.
Decatur, Georgia, Democrats line. You're our last phone call.
Professor, I have a quick question regarding this administration's corporate tax cuts. I'm trying to understand something. These tax cuts, aren't they used to outsource our middle-class jobs and to build economies outside the United States, paying for their infrastructures and salaries?
No. We have some of the highest corporate taxes in the world, which discourage manufacturing and the creation of businesses in the United States. Our high corporate taxes essentially encourage companies to outsource and to go abroad. because then they don't have to pay them until they repatriate their profits back into the United States. It's a mistake to think that having high corporate taxes creates equity. The best job security an American can have is a competitive employer. And a competitive employer requires that taxes be fair. Right now, American corporations are overtaxed.
Professor Morisi, thank you very much for your time. We've run out of it.
Oh, it's been a real pleasure. This is real fun, and I enjoyed talking to all your listeners.
Thank you.
Viewers.
Thank you.
Very much.
We're going to take a short break. When we come back, we'll open up the phone lines and get your comments and thoughts on things that you've seen on the program today.